Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick and Caroline Hyde here, counting you down to the closing bell. And here to help take us beyond the bell, Carol Massar and Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, and YouTube. And Carol, taking a look at the markets here, we should point out that all of the major indices did open in the green today, but right now, almost all of them are in the red here. So still some concerns here about the economic picture.
A much more negative tone here with just a few minutes left in the trading session. I got to say, Romaine, I've been keeping an eye on the bank stocks, down about 1.4%. JPM, of course, JP Morgan reporting tomorrow. This group is down about 20% from January 13th. We've seen a lot of pressure. So I'm wondering, Tim, will they maybe come out better than expected tomorrow, or will they kind of, show the negativity that we've seen in the trade in these names so far this year?
Yeah, that's a question, but I'm also thinking bigger picture when it comes to these bank stocks and getting an idea from them about how consumers are using credit cards, what consumer spending is looking like, and if we can get any insight into sentiment and how they're seeing across their customers, because they have such a good look at the economy.
And I think we have to address sentiment at this moment right now. Of course, a day where sentiment took a real hit in the city that we know, that we love, and a place where we all want to get back to normal at the moment. So I think there's a focus on how consumers are dealing with the situation thus far. I think this is an interesting day to be trying to address markets and indeed us as New Yorkers.
Yeah, and we address those markets. We should point out, in addition to that CPI data, there were a couple of interesting sentiment data points, at least as far as investors are concerned, and business owners at NFIB Small Business Sentiment Indicator, as well as that Bank of America survey, which continue to show a little bit of pessimism and concern here amongst investors and business owners. Maybe that's playing in to what you're seeing on the screen here. We are getting the closing bells here in New York. The Dow Jones Industrial Average is going to finish down by more than 80 points here on the day, down by about 0.2%. The S&P 500 now going to log a third day of declines here, down about 15 points or 0.3%. The NASDAQ Composite down about 40 points or 0.3%. One of the bright spots, though, is the Russell 2000. It had fallen for 5 straight days prior to today. It opened in the green and actually stayed in the green. Looks like it's going to close higher by about 0.3%, Carol.
And Romaine, in a day where once again we saw some volatility, finishing off way off our highs of the day, I wanted to check out the volatility index, the VIX, just up a hair, but coming in at 24.53, Caroline.
Meanwhile, let's have a little look at some of the individual industry groups that we keep such close eye on at this particular part in the market close. We look at what's outperformed on the day. Well, we have had a down 0.3%, but still outperformance is once again the industry group that has done so well throughout the entire year. It is energy index up more than 1.7%. That, as we see once again, oil above $100 a barrel in reigniting those inflation worries that, of course, we addressed with the 8.5% print a little bit earlier. Autos on the higher side, tech, utilities, but on the downside, really notable as we address the earnings season that almost is upon us with the likes of JP Morgan, banks off by 1.3%.
All right, so you guys were talking about sentiment. This is really important because we know it can in fact impact certainly market moves. It can impact in terms of consumers, whether they feel confident enough to go out and buy things. Well, Bank of America coming out in May surveyed a bunch of fund managers, and they are saying that they are the most gloomy on record on recession woes specifically. But what's interesting is that they've actually got a signal, a market signal, a contrarian indicator, and it's so bearish, it's triggering their buy signal when it comes to stocks. So, that happens, right? Whenever so much gloom and doom is out there, that ultimately people say, okay, maybe this is a time to buy.
It also affects consumer behavior, and you have to think about inflation expectations versus inflation that we're seeing. There was a great article by Claire Ballantyne and Charlie Wells a little earlier today on the Bloomberg, and it talks about a Harris poll that Bloomberg News that Harris poll did on behalf of Bloomberg News. And more than 80% of people are changing the way that they're spending money as a result of inflation. So perhaps they're buying more now because they think inflation could go up. And it does tend to turn into the self-fulfilling prophecy of people buying more now because they're worried about prices going up later.
Yeah, and you're always reminded, of course, in getting that inflation report here, just how much inflation is outstripping some of those wage gains. Wage gains, of course, that we were all applauding just a few months ago. But now, at least particularly for some of those lower wage workers, you're starting to wonder whether there actually is a net benefit there.
Did you see the Albertsons news earlier today? Albertsons CEO coming out and saying we're concerned about people at the lower end of the income spectrum because inflation affects them more. and their ability to actually buy food at Albertsons.
And this is the tension for a Federal Reserve, of course, that has to be addressing inequality. Initially, we were worried about the inequality, the lack of openness in a labour market, inclusive labour market, running at full steam to be able to ensure that those who have previously been left behind in other upward trajectory cycles are brought on board. But now it's, well, the inequality that inflation inflicts and how the lower income are most affected by all of this.
Well, and this is interesting, right? The Fed had put that out front and center. They wanted to make sure that when the economy came back, that it was inclusive. But how much is the Fed willing to give that up in its fight against inflation, guys?
We just had a really interesting conversation with Veronica Willis, investment strategy analyst at Wells Fargo Investment Institute. She's pretty optimistic about the U.S. economy for the year. She doesn't predict a recession happening this year in the U.S. She can't say the same thing for 2023. They haven't come out with a call yet, but she said it is increasingly a concern.
Yeah, and I mean, I hate to be pessimistic. I mean, look, we're heading into this earnings season, right? I mean, we actually had some lingering earnings from Q4, including CarMax, which reported its Q4 ended in February, which seemed to show a decline, at least in unit sales of cars. Of course, the price of those cars means that revenue was actually up, but some concerns here about margins there. We're going to get Delta Airlines tomorrow morning, so we'll get a read here on travel trends, which we know had been relatively strong. There's a lot of anecdotal evidence that airports are still jammed, but how much does that continue?
Yeah. Did you guys see this column by the editors at Bloomberg Opinion piece? And basically, I love the headline on it. Don't expect clairvoyance from the Federal Reserve. And it's just saying, you know, the balance of future supply and demand is unknowable, and so is the correct path for interest rates. I think we need to all be realistic that every meeting is truly a live meeting, but it doesn't, you know, whether the Fed is more aggressive or whether it backs off, they're going to be looking at the current batch of economic data in front of them to really determine policy.
Okay, I want to go back to airports and airlines because what Romaine said.
The Cincinnati.
Yeah, here we go. You know, yesterday I was complaining about how much tickets cost. Well, today we got the data from the Bureau of Labor Statistics that just in the month of March, month over month, airline airfares went up 10.7% year over year, an increase of 23.6%. So it's not just me.
It's not just you.
No.
Is it all domestic? I would want to know international versus domestic. But
yeah, that's a good question.
Again, that comes down to how we want to be spending our money at this moment. We want to suddenly have events, we want to have experiences, we want to have services, and therefore perhaps we see a roll-off in potentially used cars and car prices and the like, but certainly the reallocation of where people put their money to work and how people feel at the moment to be able to do so.
Yeah, and there's also a question, though, of capacity. And I know we keep talking about the ability of the consumer to keep spending, but when you look at household savings rates and things like that that were sort of buffering this economy for so long here, you've seen that line on those charts come down pretty significantly here. Then you combine that with, you know, higher food prices at the grocery store, higher gasoline at the pump here, and you wonder what the capacity is to keep spending on those discretionary items.
Can we just say, though, for TV can see this, but for radio, we're showing a chart and showing that rise that we saw in gasoline prices month over month. I mean, 18%.
That's just from last month.
Which is a huge thing.
Yeah.
So it's just a reminder that if we start to see some kind of correct in this, that will have a big, you know, impact on what we're seeing in terms of the overall inflation rate.
And it's psychological. I mean, you know, people see that even if you don't drive, you see these prices at the gas pump, at least, you know, as advertised, and it affects you because you see those prices going up.
And it affected the market sentiment today when oil went back above $100 a barrel. Perhaps that's what sort of suddenly pulled back the overall desire to be buying into equities a little bit earlier.
It's rough, man. And some of those data points certainly just are eye-popping. All right, guys, we got to wrap it. That's going to do it for our cross-platform coverage on radio, on TV, and on YouTube. We will see you again, same time, same place tomorrow.